And now, the moment you've been waiting for all week, Courtney Smith's weekly video newsletter, TradeSmith.
Wah, 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 wah. I hear all the crying all the time. The market drops 10%. Oh, woe is me. But not for you. Because you see, you are watching TradeSmith. And did we lose money when the market dropped 10%? Nah. And not only that, but as the market bottomed, we bought options on QQQ, which are up about 400-500% as I record this. The reason is because of our philosophy. It's not all the super tricky indicators that nobody else has. It's because our philosophy is all about risk management, not taking big risks, but then using those tricky indicators, those insightful indicators to help call every twist and turn in the market. So thank you for watching this video. And I hope you're enjoying it and hopefully, more importantly, making some big bucks. All right, let's get right into it. Of course, you won't make any money at all reading this, but I got to show it to you. Okay. As we talked about last week, I showed you the momentum divergence and told you that the market was going to put in a bottom. We did do that. I showed you how the purple predictor was not going down very much at all, and it meant that the smart money was coming in. Look at the purple predictor now. The purple predictor is now at all-time highs. That shows that money accumulated on the dip, and I showed this to you last week. So what does this now mean? Well, because of the purple predictor, it suggests that we're going to rally all the way back up towards the old highs, up around 2875. Now, I'm going to hold off yet telling you whether it's going to break through those highs. I'd like to wait another week to see how it reacts right about here. But right now, all indications is that the bull market is back in force. Now, technically, we're not making higher highs yet. But this power of this movement off the lows is pretty good. But at this point, I'm still not sure it's not going to fail up at the high. Purple predictor says yes. But let's go take a look at some of our other indicators. Here's the advanced decline line. I pointed this out to you last week about how it wasn't coming down as much, showing that the average, whereas the index itself was down 10%, the average stock was down only 5%. And here you can see once again that the advanced decline line is leading to the upside. Let's take a look at the Dow Jones. The selling pressure is still greater than the buying pressure in the market. You can see the little red line in the upper right-hand corner is above the little green line. But notice that they're converging. Notice that the selling pressure is getting less and less, and the buying pressure is getting more and more. Now, we haven't got finally to a crossover of those two indicators, so there's still not net buying power, but nonetheless, it's a movement in the right direction. Now here, I just wanted to quickly show you the purple predictor, all-time highs in the Dow. What about the Nasdaq? Well, it didn't quite make it to new all-time highs. But the Nasdaq has actually rallied more. This is for our fully paid up members. They know I bought a call near the low of the day there. I think the day after the low after the day, and we're already up 400-500% on that call. So we're doing great in that. But I'm going to probably take profits on it pretty quickly. Probably today, because I'm just getting a little bit worried. Just don't think we're going to make new highs quite yet. Okay, seasonality. I remember I still have it on a bearish signal. I shouldn't say bearish. I should really say neutral. But because the normal seasonality, which I'll show you in a second, would be for a long, slow drip in the market, I called it bearish, but it really should be neutral to bearish. Notice that the purple predictor is skyrocketing higher. I mean, really, that's almost a vertical line there, which shows that this market has more to go on the upside. But I'm not going to switch it back to bullish until we make new highs up where that green line is, up around 151-ish. If we break through there, then I'll switch our seasonality indicator back to bullish. But for now, let's call it neutral to bearish. Now, here we are towards the midpoint of February, and we're now back into this seasonally bullish period. So our seasonality indicator may be neutral, but we should be expecting stronger prices just purely on seasonality, at least into April. And then you can see from April to October, not such a good market, not such a good market. But let's go up there, sniff out the old highs, maybe break through them a little bit. We'll take a bunch of profits at that point, and then we'll start to play some defense as we go through the year. The yield curve remains pretty much a non-event at this point. I talked a lot about it last week. Go watch last week's video. All right, asset allocation popped. This is a big thing to me because what it shows is that this rally, I showed you how the smart money was accumulating and is still accumulating. They're still buying crazily. And what they're doing is they're selling the bonds that they had bought during the market dip. So when the market dipped, they sold stocks, bought bonds. Now they're selling those same bonds and buying the stock market. The stock market RISKDICATOR has stayed at a pretty high level, so I find that quite interesting as well and supportive of this bull move. Global shares have also rallied, but I think the action is in the U.S. Bonds. Now, bonds finally stabilized, and I think that they're going to rally this week. And that's going to send some movement throughout the whole market. A relief is going to go through the whole market because what caused the whole dip and what caused some big changes in gold and the dollar was interest rates, the bond market moving lower, meaning interest rates moved higher. And we're going to see a relief rally this week. We're going to see the market rally. We started on Thursday. We'll probably rally for most of the week, and that's going to change. Everything's going to change. We're going to start to see the pressure come off the stock market, and it's going to affect gold and the dollar as well. So let's get to those. Our indicators also. Now, last week they were all screaming higher. Now, the green line are interest rates. The gold line is gold, and you can see that gold came down, and then it started to rally. You can see the blue line, which is 10-year treasuries in Germany. It's hooked down, suggesting lower interest rates in the U.S. And then down at the bottom, the CRB index had a little bit of a plunge-o-rama there, and that's also suggesting lower interest rates. So I'm looking, our indicators here are a mixed bag, slightly looking for lower interest rates, but the previous chart tells me, based on momentum divergence, that we're going to see higher bond prices, lower interest rates here in the coming week. All right, let's take a look over here. The dollar came down, but look at that gigantic key reversal that happened on Friday. Look for the dollar now to rally. Look for the dollar to rally to higher prices. I think we'll probably get back up to that 90.25 level, and then let's take a look at it there. But I'm pretty convinced of a rally, and in my own personal account, I'll be looking to get long the dollar, just for a short-term trade. Okay, gold rallied sharply as the interest rates kind of staggered there for a little bit. That gave a little bit of a bid to the gold market. Now, the red arrow shows you where I told you the low of the market would be. I said about 1305-ish. We got down to 1309. That's a perfect call. Of course, I know you're used to perfect calls. That's why you watch this every week. All right, but I think that we're going to see gold move higher this week. The dollar will go up. That's not good for gold. That's bearish for gold. But I think that the interest rate factor might keep us moving higher. Not much, though. Not much. Look for more stability here in the gold market this week. Our indicators move back towards bullish. The blue one up at the top, let's call that neutral to bullish. The one in the middle, neutral to bearish. But the bottom on the green line is insanely bullish. Oil looks like we'll go back up towards sniff out the highs. Now, Bitcoin, oh, shoot, this is not an updated chart. Well, I'll have to, sorry, no Bitcoin this week. All right. Sorry about that. I'm really embarrassed for being so amateurish there, but okay. So you know what to do. I won't nag you. You really should be. Look, when we bought that call on the Nasdaq at the low of the market, the profit on that one, it would have cost you $147. we were already up hundreds of dollars, would have paid for the whole year on TradeSmith. So all you freebies, we love having you here, but really, you need to be making some money in this market. All right, fully paid up members, hang on just a second. I got lots of new trades this week.